think over the next 2 years, the real question is, can we have a strong bipartisan middle, or are we going to have that kind of fragmentation?
If you've ever wished you had a roadmap to navigate through a market crash and come out thriving, well, you're in for a treat. In this video, we will unravel the secrets of wealth preservation for the 2023 market storm, drawing from the knowledge and the actions of the legendary Ray Dalio in the stock market. Who is Ray Dalio? Whether or not you know who Ray Dalio is, it's necessary to understand why he is an important figure you need to listen to when it comes to the stock market. So, who exactly is Ray Dalio? As a kid, Ray Dalio began to trade stocks at the age of 12, using earnings from his part-time job to invest. Yes, that kid was Ray Dalio, and that early start set the stage for his fascinating journey in the finance realm. Fast forward to adulthood. In 1975, he founded Bridgewater Associates, an investment management firm. But here's where things get really interesting. In the early 80s, Dalio predicted a debt crisis and a recession. Lo and behold, it happened. This foresight catapulted him into the spotlight, earning him the label of a guru in finance. But Ray's not just about making a lucky call. His brainchild, Bridgewater, has consistently made wise investment decisions. For instance, during the 2008 financial crisis, while many were drowning in losses, Dalio's firm sailed through like a champ, making gains.
We are at the beginning of a very classic late big cycle debt crisis, when the supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers. What's happening now is we have to sell all this.
Now, you might be saying to yourself, why should I care about this guy and his moves in the stock market? Well, for starters, his success isn't a fluke. He has a knack for understanding economic cycles, debt cycles, and how they shape markets. When Ray Dalio talks about the market, it's like listening to the Oracle of Wall Street. His insights aren't just theoretical mumbo-jumbo either. He follows a principle-driven approach that he calls principles, based on timeless fundamental truths. He's penned a best-selling book about it, sharing his wisdom with the world.
You start to see the emergence of populism, and we see extremism in both of the political parties. Okay, we see that split. A populist is an individual or a leader or a political person who will win at all costs. That the rules of the game don't as much matter.
Named twice in Time magazine's list of the 100 most influential individuals, and also Forbes' list of the wealthiest individuals, Dalio has earned himself the tag Maestro. His voice echoes in trading floors, and when he speaks, the market listens. He's had his fair share of hits and misses, like any master, but his overall track record is undeniably awe-inspiring. So when you hear about Ray Dalio's approach in the 2023 market crash, pay attention. This man's experience, expertise, and knack for seeing through market uncertainties can be your guide through turbulent financial waters. Make sure you stay tuned as we decode more about this financial sage and what his crystal ball predicts for the market ahead. Stocks Ray Dalio is buying into now. Here are the major stocks that Ray Dalio has been buying. 1. First Horizon Corporation. Ray Dalio, the investment guru, made a notable move with First Horizon Corporation, FHN. As of the last update, Dalio's Bridgewater Associates purchased a chunk of FHN shares, adding about 8.9 million shares to their portfolio. That's no small change, roughly valued at over $180 million.
And the consequences of that are going to be a weaker economy going forward. Doesn't have to be a big downturn because of the household sector, but it is a balance sheet kind of recession.
Now, why FHN? Well, it's a regional bank with a focus on the southeastern United States. Ray Dalio is known for strategic investments, and banking could be a smart play considering the evolving financial landscape. First Horizon has been expanding its footprint and recently merged with Iberia Bank, creating a stronger entity. However, it's crucial to note that Dalio's move is part of a larger trend. Institutional investors are eyeing banking stocks due to potential interest rate hikes and economic recovery post-pandemic. FHN's performance will be one to watch as the banking sector navigates these shifts. It's a dynamic chessboard, and with players like Dalio making moves, it'll be fascinating to see how the game unfolds. 2. Grab Holdings Limited. Dalio has also placed his chips on Grab Holdings Limited, symbol GRAB. a Southeast Asian tech powerhouse. His firm, Bridgewater Associates, took a sizable stake in Grab for about $1.3 million in shares. That's not chump change. It's an investment worth around $39 million. Now, why Grab? Well, it's more than just a ride-hailing company. Grab has its fingers in multiple pies: food delivery, digital payments, financial services, you name it. It's essentially becoming a super app, a one-stop shop for a host of services. Southeast Asia is growing rapidly, and Grab is riding that wave. Plus, their merger with a special purpose acquisition company, SPAC, propelled them into the U.S. stock market spotlight. I think it's understandable why Dalio invested in Grab. They're a promising company and are probably the big kahuna in Southeast Asia's tech game. They've partnered up with a staggering 25 million customers, over 2 million merchants, and a whopping 5 million driver partners. Imagine a tech colossus that's not only ruling the ride-hailing scene, but also conquering food delivery, digital payments, and financial services. They've essentially become the go-to super app for a massive chunk of Southeast Asia's population. That kind of reach means they're not just playing in the big leagues. They're rewriting the rulebook, setting trends, and dominating like a champ in this burgeoning tech ecosystem. 3. Genworth Financial GNW. Ray Dalio, the investing genius, played his cards with Genworth Financial. His financial juggernaut, Bridgewater Associates, snagged a hefty 690,000 shares of GNW. Crunching the numbers, GNW has flexed its muscles over the last 12 months, boasting a solid 38% growth.
So when I look at the supply-demand issue, there's a supply-demand issue for that debt. There's a lot of debt. It has to be bought, has to have a high enough interest rate. So a crisis, that's, if we continue down this path in terms of what's likely over the next, 5 and 10 years, then you reach the point that balancing act.
Analysts have chimed in with a hold rating, using their quantitative wizardry to back it up. GNW specializes in financial services, notably mortgage insurance, among other things. With Dalio putting his chips on the table, GNW is screaming for attention. Watch this space. It could be the next big thing in the financial world. And when a titan like Dalio makes a move, the market should pay heed. Still watching? This must mean you like our other videos. Subscribe to get more videos like this. 4. BGC Partners, BGCP. Dalio has also snagged a hefty 618,000 shares of BGCP, a move that's turned heads. Let's dive into the digits. BGCP is currently trading at a price of $4.40 per share. Now, should this stock be on your radar? Well, here's the rundown. It's not exactly a dividend extravaganza, offering a rather modest dividend yield. Plus, the growth prospects don't seem to be shouting from the rooftops, making it a bit of a snoozer for some investors. However, it's all about finding the right fit. Dalio's investment strategy is intricate and often part of a larger game plan. While BGCP might not dazzle everyone, it could very well be a strategic play in the broader scheme of things. Investors have their preferences, and BGCP might not align with some due to the modest dividend and perceived limited upside. 5. Meta Platforms. Not only has Ray doubled down on his Meta share holdings from a cool 536,000 to a whopping 1 million, that's not chump change. Let's talk numbers. During Q1, Meta, formerly known as Facebook, took a tumble, down a staggering 50% from its high of $244. That's a classic buy the dip move right there. Fast forward, and Meta's stock price has doubled since then. Yep, you heard it right. It's doubled.
We're right at the brink of starting to find out that the amount of selling of government debt collapsed, right? We didn't issue government debt. And now we're going to issue a lot of government debt. And so when we look at the buyers, there appears to be a significant shortage of the buyers for that government debt. But we're now at the brink of being able to see what that supply-demand picture looks like as we go over the next year.
Why the optimism? Meta's got a lot in its toolbox. Facebook, Instagram, Oculus, WhatsApp, the list goes on and on. It's not just about social media anymore. It's about building a whole new virtual reality. With a visionary like Mark Zuckerberg at the helm, Meta's set to soar higher. So, you might want to sit up and pay attention. This isn't just about investing. It's about investing wisely. Meta's not just recovering, it's promising an exciting future. Time to roll the dice. 6. PayPal. Ray didn't just up the ante. He went all in. increasing his share from 971,000 to a hefty 1.55 million shares. That's a bold move in the stock world. Let's talk statistics. PayPal took a bit of a roller coaster ride, sliding down 80% from its recent high of $306. But here's the plot twist. The analysts remain positive that the market's looking bullish. They've stamped profitability with a solid A and growth with a respectable B. That's like getting an A+ on your report card in the stock market classroom. Why the buzz? PayPal's not just a fintech player. It's a game changer.
Three forces are the biggest in our lifetime. You just touched on one. The largest amount of debt offerings and monetization of debt. What is money worth? What is the supply demand?
With a massive user base and a stronghold in the online payment realm, it's like the Thor's hammer of the financial world. Plus, the digital payment arena is only getting hotter. So if you're considering your stock options, PayPal might be the golden ticket. Watch this space. The PayPal story is far from over. 7. Google stocks. Again, Dalio didn't just up the stakes, he went all in, more than tripling his holdings from 743,000 to a jaw-dropping 2.31 million shares. That's a massive power play in the stock market arena. Let's spill the beans on numbers. Google took a bit of a dip, down 40% in Q1 from its recent high. But guess what? This didn't dent its armor. It's rated high, standing tall and proud once again. Why the buzz? Google's not just your regular search engine. It's a tech titan. Think about it. Google is your go-to for pretty much everything on the internet. Plus, they've got their hands in various pies: advertising, cloud computing, software, hardware, you name it.
And if you have debt, you have to pay back the debt. The only difference is you can print the money. That's it.
Which we do.
Which we do. And so the question is, what ends that, or is there no end to that?
Is there a day of reckoning?
Okay, there are two things that end this. First, that the debt service payments to those who are holding the debt, who need it for reward, they want to get paid back, plus an interest rate.
So here's the takeaway. This isn't just a stock investment. It's betting on a tech juggernaut. Dalio sees it, and so do the market enthusiasts. Google's not losing its magic touch. It's evolving and shaping the digital landscape. If you're looking for a stock to stack, Google might just be your golden goose. Keep your eyes peeled because the Google story is far from its final chapter. Are you ready to unlock wealth? Ray Dalio's strategic moves in the 2023 market crash are the keys to unlocking potential wealth. His calculated investments and bold strategies reveal a roadmap for thriving amidst the storm. By paying attention, learning, and applying these insights, you can navigate these challenging times and set a course towards financial prosperity. Stay tuned for more expert guidance on getting the most out of today's turbulent financial landscape.